1.9%. The Kospi also here ending the day higher, reversing yesterday's losses. They are up 2.6%. Now back to our shores here, local stocks unable to mirror those gains. Only 7 of 13 member stocks entering the positive zone on Tuesday, with SM leading the pack here with a 2% increase. That's 2.1%. Other conglomerates also holding the fort here. You have the likes of JG Summit ending the day inching higher by 0.9%. There's also Metro Pacific also up by 0.25%. Ayala Corporation likewise here enjoyed a bit of a rally, up 0.1%. However, in the worst performer side, you have URC here ending the day in the negative zone, down by over 3%. Now, telco giant PLDT likewise also slipping by as much as 2 3/4%. Meralco also in the red, down 2 4/10%. But let's zero in on media giant ABS-CBN. It did see shares slip by as much as 5% earlier, but trimmed those losses, ending Tuesday down 2% to 14 pesos a piece. This is after the president, in a speech last night, made fresh remarks about the network's franchise, while not exactly mentioning the TV giant. You have President Rodrigo Duterte saying that a company's franchise will not be implemented unless it settles all tax liabilities to the government. He said, quote, "You will not see the light until you come to the government with clean hands." While he did not explicitly mention ABS-CBN, the timing of his words are quite curious here, or is quite curious, as it comes after Representative Vilma Santos Recto filed a bill to actually renew the network's franchise. ABS-CBN, in fact, surged by over 8% yesterday on new franchise hope, but that has since reversed today. Again, ABS-CBN slumping by close to 2 1/10%. Now, here are other stories. Again, other stories here on the corporate front. Not even the pandemic can actually stop Security Bank from pushing through with its expansion plans. The lender said it will open up to 7 new branches this year. The bank said it still recognizes the importance of branches despite its transition to digital banking. To date, Security Bank has a total of 313 branches all over the country. Let's talk about another lender, EastWest Bank. The Gutianon-led bank said in a disclosure that it will, quote, "promptly return the money of its 2 depositors believed to have been taken by a missing branch manager." EastWest has earlier confirmed that a branch manager who had been transacting with the depositors for years has gone missing. The bank said the amount of the missing deposits was not significant. Fitch Ratings has flagged the pace of investments in 5G technology as one of the top issues for investors in Asia-Pacific's telco sector. The Global Debt Watcher expects emerging markets in the region, like the Philippines, to pace their 5G investments over the next few years to preserve cash flow. Operating cash flow is seen to significantly lag behind 5G investments, keeping free cash flow constrained over the next 3 years. Fitch also notes a lack of compelling applications that differentiate 5G services from 4G in the Philippines, whereas in advanced markets like South Korea, Taiwan, and Singapore, companies are likely to position 5G as a network differentiator to strengthen their competitiveness. Globe's 5G is currently available in over 1,000 areas in the country, while PLDT's 5G network is available in its headquarters in Makati City, New Clark City in Pampanga, and Araneta in Quezon City. Here are other headlines we're keeping our eyes on. An industry group is urging the Energy Department to prioritize stranded projects in its bid to auction renewable power supply. The Biomass Renewable Energy Alliance says projects that failed to secure a guaranteed power rate under the feed-in tariff system should be given priority. The group noted that while guidelines of the government-backed green energy auction qualifies all kinds of renewable energy technologies, there seems to be a favor for solar power. A solar energy stakeholder, however, says that solar has had a history of capturing a huge slice of the renewable energy market since it is competitively priced and easy to install. The feed-in tariff scheme for solar, which ended in March 2016, saw an installation target of 500 megawatts, which was oversubscribed by around 360 megawatts. A forecast within the sector places solar energy as once again dominating the renewable auction market. The Transportation Department says the first phase of LRT1's Cavite Extension project is now more than halfway to completion. The agency says the overall progress rate of the extension's operability section stands at almost 52% by December. The first phase of the extension consists of a 7-kilometer stretch with 5 stations between the Redemptorist Church area in Baclaran and Dr. Santos Avenue in Parañaque. The project's construction also includes the expansion of the existing depot in Baclaran and the building of a new satellite depot in Zapote. DOTR expects the LRT1 Cavite extension to start partial operations by the end of this year. But LRT1 operator LRMC noted that they still have to agree and align with the department on the project's timeline, considering possible adjustments due to the pandemic. Now, the Senate has finally approved on final reading the amendments to the country's Anti-Money Laundering Act, but will these tweaks be enough to save the country from inclusion to the final Financial Action Task Force gray list? To discuss that, we have AMLC Executive Director Georgie Racela. Good afternoon, Attorney Georgie. It's great that you could join us on the show this afternoon, sir.
Good afternoon, Jes, and thank you for having me here in your show.
Okay, sir, as we speak, you have the bicameral conference already discussing amendments to the AMLAC, but let's still focus first on the amendments made by the Senate. Would you say that's enough to actually avert an inclusion in the FTAF's gray list? How satisfied are you, Attorney?
Well, if the Senate version will be passed into law, we think that we will still be gray listed. There are several provisions in the Senate version that were not compliant with the Financial Action Task Force recommended actions. However, the lower house version is much better because they captured all of those recommended actions included in our or written in our mutual evaluation report.
So would you say then, sir, that your preference, that you prefer the House version more? Would you say as well that there might actually be some provisions in the Senate's amendments that would actually work well to our advantage?
That is correct. We prefer the lower house version because it appropriately addressed and was very responsive to the mutual evaluation report recommended actions. In particular, there are 3 provisions in the Senate version that are not compliant. The first one is because in the mutual evaluation report, there's a recommendation for Congress to pass a law that will grant AMLC full investigative powers. The lower version addressed that recommendation. They granted us full investigative powers, but the Senate version did not grant the AMLC such powers. That's number one. Number two is the inclusion of real estate brokers and developers as covered persons. Again, this is one of the key recommendations indicated in our mutual evaluation report. This was addressed by the lower house version, but not by the Senate version. And the third one is very minor. They both, the House and the Senate version, they both included tax crimes as a predicate offense. However, the threshold there was a minor difference. As for the lower house, it's 20 million threshold. For the Senate, 25 million threshold amount for violation of tax crimes or commission of tax crimes. However, the more important issue is the repeal of the provision that says the AMLC shall not intervene with BIR operations. So we proposed for the deletion of that provision because If tax crimes is already a predicate offense, then we need to coordinate with the BIR. But this provision was retained by the Senate version. So those three provisions are very important and critical. And if these are not addressed, we will still be included in the gray list.
But how confident are you now, sir, that a law will actually be put in place before the FFTAF's February 1 deadline? And is it enough to actually just pass a law? How will you, in a way, demonstrate effective implementation? Will that not be part of the requirement of the FTAF?
Yeah, so it's very important that we have this law passed before February 1. And so one of our requests to Congress is to, when they pass this amendment, to include in the effectivity clause that the same should be made effective immediately after publication. They don't have to write 15 days after publication, so that we will have room to have this published and it will immediately be effective after its complete publication in the newspaper general circulation. And then we will issue our implementing rules and regulations. And because it's already 19th of January, if we indicate 15 days after publication, then that's definitely after February 1. So that's one of our requests, that they include that in the effectivity clause of the bill, that it be immediately effective upon passage of the law. So more flexibility is given in regard to the implementation of the law. We can already exhibit implementation even after February 1. There is room for flexibility. We can show this to the Financial Action Task Force that the law was just passed recently. But for the cutoff, and we call this technical compliance, it should be made effective by February 1.
Okay, I want to go back, circle back to one topic here that you did say earlier, particularly the inclusion of the property space here, especially on real estate brokers and agents. At the same time, you have another sector that's also being included, if I'm not mistaken, in the Senate version, that is the inclusion of offshore gaming operators. How important is this, and will stricter regulation not further somehow weaken both sectors?
Okay, let me discuss first the coverage of real estate brokers and developers. As mentioned, this is one of the key recommendations in the mutual evaluation report. So without which, again, it is sure that we will be included in the gray list if this is not included as covered persons. For the POGOs, for the offshore gaming operators, this sector is already part of the covered persons, because under Republic Act number 10927, the latest amendments to the AMLA, online casino operators are included as covered persons, and they fall under that category. So the inclusion in the Senate version of POGOs and their service providers are merely for making it more clearer that they are covered and included as within the AML or anti-money laundering framework of the country.
Okay, lastly now, Attorney Racela, and very quickly, what will an inclusion to the FTAF's gray list mean for the Philippines?
Well, the immediate impact will be all Filipinos will be considered as high risk customer for international financing or for international financial transactions. So if you have bank accounts kept in global banks, you will be considered as high risk, because we are included in the gray list. In particular, the European Union countries members have automatic tagging of those countries included in the gray list as high risk. So what's the implication if we are considered as high risk? This would mean additional layers of know your customer, as well as understanding the transactions of each Filipinos, or each business or businesses owned by Filipinos. Meaning you need to justify the transactions rather than just conducting it in normal course of business of a bank. Because and if these are undertaken, that will involve additional costs for the banks, for the international financial system. So there will be two options for them. It's either to de-risk Filipinos, meaning disengage with the customer, Filipino customer, or charge higher costs. And if that is the option available to the financial institution, then that will be higher remittance costs for OFWs, meaning lower expenses, household expenses for them that they will be sending to their families, respective families, including the higher interest rates for businesses because they would have to recover those costs through all those means. So higher operational costs, higher financial costs for us, and including delays in transactions because before they proceed with the transaction, they will ask a lot of things, and our estimate is 5 to 10 days delay in facilitating these financial transactions with high risk customers.
All right, definitely so much hanging on amendments actually being pushed for in Congress, especially as they form a bicameral conference on the amendments on the Anti-Money Laundering Act. Thank you very much for your time this afternoon, Attorney Mel Georgie Racela, AMLC Executive Director. Thank you, sir.
Thank you very much, Jester. Thank you.
And those are the biggest news this trading day, January 19, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.